Welcome. My name's Gary Billingsley and I'm the president of Aurex Energy Corp. I wanted to welcome you to the first of what we hope is a series of updates that we'll be doing tentatively on a monthly basis to let you know what's happening with Aurex. First of all, I wanted to thank the shareholders for their patience in what's been a fairly rocky road over the past little while, but we are making progress. Just reference the press release we put out yesterday, dated October 8th, announcing a joint venture that we're going to be entering into to start developing our natural gas assets in the Barnett Shale in Texas. The Aurex Energy Corp overall strategy is that we are focused on the types of commodities that are important to green technologies and to what we see as the move towards electrification in North America and globally. One of these commodities that we think is important is natural gas. With the increase in demand for natural gas, especially for liquefied natural gas, we think is an important transition to the electric economy, if you like. And we view domestic sources of natural gas as quite important. And that is a significant part of the assets that are within Aurex. The other part of what Aurex does is mineral exploration, focused on commodities like copper, which we view as the real green metal. And the demand for copper we see increasing significantly as we move more and more to the electric economy. For the purposes of this video, we're going to be focused first on the natural gas side of things because that's the part of what we're doing that will be generating near-term cash flow and support the rest of Aurex's activities. The natural gas assets that we own, we purchased a private subsidiary company based in Dallas, Texas. Within that company, they hold 100% interest in 10 natural gas wells in the Barnett Shale. These were former producers and they're all tied into pipelines. And the near-term goal is to bring those natural gas wells back on production and start generating cash flow. According to the independent engineering report that we had done last December, once all 10 wells are on stream, we should be generating in the neighborhood of $10 million US a year in cash flow. The Barnett Shale, just the history of it, is that between about roughly 2000 and 2008, there was 20,000 plus natural gas wells drilled in the Barnett Shale. Majority of them are horizontal wells. And at the time, natural gas prices were as high as $12 an MCF. And leasing costs, capital costs, operating costs were quite high because of the intensity of the activity in the Barnett Shale. Around 2008, with the global financial crisis and the crash in oil and natural gas prices, when natural gas prices fell to around $4 an MCF, many of the operators shut in their wells in the Barnett Shale and left and basically haven't returned. This provides an opportunity for smaller groups to come in, pick up these wells that are shut in and rework them and bring them back on stream for significantly less risk and less cost than the original wells that were drilled. As an example, natural gas prices today have gone as low as $2 an MCF. For us to put one of these horizontal wells back into production in the Barnett Shale, our break-even costs are around 53 cents per MCF. The risk associated with these wells, no exploration risk now because the well has been drilled and these have produced. So the reservoir risk is basically zero. Main risk is mechanical risk, that the wells are in good enough shape to rework. And Generally speaking, the operator that we have working down in the Barnett Shale indicates that this shouldn't really be too much of an issue for us. So we're anticipating generating cash flow fairly soon after we start reworking the first couple of wells. The joint venture that I mentioned that we announced in the news release of October the 8th, we have a partner that we're pleased to say is putting in $2.5 million to start the first 2 or 3 wells. We'll be announcing the details of that when we sign the formal joint venture agreement in a couple of weeks, but that allows us to start completion, reworking and completion of these wells and generating our near-term cash flow. The review of the data from the original wells that were drilled in the Barnett Shale, and that's these 20,000 plus wells, and there's approximately maybe 3,000 plus that are still in inventory as shut in, that in addition to the 10 wells we do have, that we could acquire more moving forward once we start the program. Review of the data indicates that up to 80% of the pay zone in these horizontal wells may not have been stimulated in the original fracturing program. And of the 20% of the horizontal well that was attempted, where fracturing was attempted, likely 40 to 60% of the gas was not stimulated, so that maybe 12% of the recoverable natural gas was actually available for recovery. So this offers significant upside for us to go in, rework the wells, not just increase the total reserve recoverable, but production as well. And so we're pretty excited to have the capital now to go in and commence that initial program. And we should be announcing that within 2 or 3 weeks now. So we'll end this first update there, and just mention that on the mineral side of things, we'll be doing another update on that, and we look forward to talking to you again.